I want to talk about today is what is a buyback option? What do we mean if we give you a buyback option on your insurance? So a life insurance buyback option is usually available to policies that are bundled with either TPD, trauma, or trauma insurance. Now, if you want to have a look, I've got another slide presentation that I have done on what I mean by linked or bundled and standalone. This is a really common structure for life insurance policies, as it does lower the cost of having separate insurances. And it does mean, however, if you do make a trauma or TPD claim, your life insurance benefit is reduced by the amount of that claim. So this is why insurance companies do offer a buyback option if you want it. So how does the buyback option work? A buyback option is added to your policy, and let's just say you have $500,000 in life insurance cover and $300,000 in TPD insurance, and you make a claim under your TPD. After the claim, your life insurance will be reduced to just $200,000 because you've already claimed $300,000. To reflect basically the claim that you've already made. But if it's within your policy, you may be able to buy back the TPD insurance at a later date. This means that after 12 months, you can reinstate your life insurance back up to the original $500,000 of cover, and in essence, buying back to your original cover amount. So what kind of buyback options are available? So you've got TPD buyback. So basically a TPD buyback is a standard buyback option that allows you to reinstate the full amount of your insurance policies 12 months after you've made a TPD claim. You've got trauma buyback. So a trauma buyback works the same way as the TPD, but is for trauma such as your heart attack, obviously illness. A trauma reinstatement is an additional option that allows you to have multiple claims to be made against the same single trauma policy. So if you have claimed claimed everything on trauma, you have your policy, you've actually exhausted your policy, so to speak, you can actually have a reinstatement that gives you the option of making further claims as if there was another situation. Otherwise, you may need another policy. So what should you be considering when you're looking at a buyback option? Why should you consider it? It does provide a bit of a safety net for your family in case of illness and death. And if you don't have a buyback option, the cover will be at a reduced amount and it may not be suitable to your family needs. But again, it also comes down to the cost of it as well, I know. So how does it come in handy? Consider a scenario where someone suffers a heart attack, is unable to work. The trauma insurance will cover the costs of with the heart attack, but this will be deducted from the life insurance amount. A buyback is important because after 12 months, the life insurance can be reinstated to the full amount. So the life insurance claim will be paid in full if there was to be an incident. And it's usually done without further underwriting required if that is needed. And there is there an additional cost? Yes, usually there is an additional cost on this. Sometimes other insurers use buyback as an option to be bundled, and therefore, it can be an additional cost. Some may have it included. A standalone option, not bundled with insurances, not bundled. The buyback option will generally cost a lot more. However, there is flexibility. So as a bundled option, the buyback policy will definitely potentially be included in the overall insurance premium. So it really comes down to the structuring when we're putting that together. So what are some of the conditions when we actually go through that come with a buyback option? Some insurers will require underwriting and new premiums. It may have an expiration date based off the age. It may be a partial buyback or a full, depending on the terms that you've agreed. And a repurchase term insurance may not be eligible for indexation. So that it depends on the situation. A buyback may be dependent on health habits. And it also may be based off a 12-month or 1 year, which can affect the repayment date. So there are some different factors that are considered, but it definitely is an option depending on your personal circumstances. So that is something we can discuss with you. If you've got any questions, please don't hesitate to contact us. Thank you.